So we're going to do problem 5.4a. It's probably a good idea to print it out and write it down as we go along so you remember it a little better. So we're going to do both transactions for the buyer and the seller. So the following transactions were between Summit, which is the seller, and Bluetooth or Beartooth, which is the buyer. So on August 1st, Summit Company sold merchandise on account to Beartooth Company. 48,000 terms FOB destination, which means that the seller pays the freight, the destination title passes at the destination. 215 net end of month, the cost of the merchandise sold is $28.80. So when I go to the other one, and we're going to make for the seller, and remember whenever you have a sale you have two entries, one for the accounts receivable sale for how much you sold it for, and one for the cost of goods sold inventory for what it cost you. However, when I sell it for $215, I need to account for that as if I'm going to take the discount. So let's look at this one only. Please don't just focus on where we're at. And so notice, so I have accounts receivable sales, cost of goods sold inventory, and notice the cost of goods sold inventory is for the $28.80 that it cost me, and the merchandise was sold for $48,000, but it was subject to a 2% discount. So I take 48,000 times 98%, or 48,000 and subtract 2% of 48,000, giving you the same number. So I have 47,040. And on Beartooth sides, they bought the inventory for 47,040. So record inventory accounts payable. So make sure you see how one of them is sort of the mirror of the other one to some extent, because I have accounts receivable, accounts payable. They sold it, they bought it. Okay, so let's go to the second one. Summit paid freight of $11.50 for the delivery of the merchandise sold to Beartooth on August 1st. So now I need to go back to this and see it's FOB destination. So title passes at the destination, so the seller's responsible for the freight, and this is on Summit. When you have freight in, it's added to the cost of the inventory. However, freight out is a selling expense because it's usually a promotion that you undertook to get the buyer to do it. So this is the seller, it's freight out, so it's an expense, it's not added to the cost of the inventory. So we have delivery expense and cash. So notice there's no entry on Beartooth's side because Beartooth didn't do anything for this amount. All right, next one, Summit Company sold merchandise on account to Beartooth. So basically the same as this one, terms FOB shipping point. So now title passes at the shipping point, so it's the buyer's responsibility to get that. The cost of goods sold was $40,000. So again, we have an accounts receivable sales and a cost of goods sold inventory on the seller's books, always two entries on the seller's books. We say it's net end of month, so there's no 2% discount there or 1% discount, so we can just record it simply at the 66 and the 40. And go back to the entry, so right here, I have accounts receivable sales for 66, cost of goods sold inventory for 40. And on the buyer's books, I debit inventory and accounts payable for what they paid for it. Okay, pause the video whenever you want to kind of soak it in. Hopefully you're writing this down. You'll remember it better when you write it down. Next one, Beartooth paid freight $2,300 on August 5th, purchase from Summit. So again, it's FOB shipping point, so this makes sense that Beartooth then paid the shipping. So notice this is not freight out, it's freight in. Freight in is added to the cost of the inventory. So I debit inventory and credit cash. And notice I put no entry on the 9th over here because the buyer was responsible for the freight being sold FOB shipping point. Next one. Summit sold merchandise on account to Beartooth. Again, we have the same seller-buyer relationship. 58.7 terms FOB shipping point. So think about that. Title passes at the shipping point, so the buyer pays for it. 110, so now I have a discount, so I can't record it for 58,700. I have to subtract the discount out of it. Summit paid the freight of $16.75. So notice the buyer, Bluetooth, is responsible for the freight, but Summit paid it, which is a common occurrence since the seller actually has the merchandise. So it's just like if you bought something on online or from eBay or something online, and they will arrange to ship it for you, but they'll generally add it to the amount you pay. So now Beartooth is going to pay for the $58,700 plus the freight. So remember that. The cost of goods sold was $35,000. So again, on the seller's books, I have two entries for the sale. We're going to do the freight separately. Okay, so I have accounts receivable and sales. So we have $58,700 less the 1% discount. So I have $58,113, and then I'm going to skip down to this one. And I have cost of goods sold inventory for the $35,000. So I'm just going to take these two first. Accounts receivable, sales, cost of goods sold, inventory. Now let's go and do the freight. They paid for the freight. The seller, Summit, paid for the freight, but they're just adding it to the bill, and the bill is accounts receivable. I would encourage you to keep this entry separate from this entry because you only compute the discount on the inventory. And if you combine these, you might want to compute the discount on the freight also, which you wouldn't do. So notice over here on the 15th, Beartooth, the buyer, debits inventory and credits accounts payable. You can feel free to do this in two entries. If you wanted to do inventory accounts payable for the $58,113 and then do it for the freight also, that's fine. Some people prefer that because it also keeps the discount separate. But I have 98% of $58,700 plus the freight goes to inventory and accounts payable. Next one, Beartooth paid Summit Company for the purchase of August 1st. So if we go back to August 1st, we see that they sold it. So I'm going to actually look at my journal entry for August 1st as opposed to the explanation. So let's go back to Summit is receiving cash, Beartooth is paying cash for August 1st. So on August 1st, we had accounts receivable of $47,040, and there's nothing else that happened related to that. So notice that we simply get cash and credit accounts receivable for $47,040, and there was no, one other thing I need to double check. On the 16th, so it was terms 215 net end of month. So I will never ask you this on a test. I would put it on the 15th, but the 16th is, they've got the discount. So anyway, I would have put it on the 15th. But we have accounts receivable, cash and accounts receivable, $47,040. And look over here, we get rid of the accounts payable and the cash of $47,000. Next one, we paid for the account purchase on August 15th. So let's go to August 15th, and we have accounts receivable of $58,113. And then the additional freight, so notice $58,113 plus $1,675. They got the cash, and over here they pay it. And then the last one, they paid for the account of purchase on August 5th. And August 5th, it was net end of month. So again, cash and accounts receivable for August 5th. August 5th is accounts receivable $66,000, and over here we paid it. So one thing this chapter doesn't do is discuss what happens when they miss that discount period, and we'll talk about that later. But hopefully this helps you with your homework.